Are you starting out on your wealth journey and contemplating what investment vehicle would be best for you? Do you have some money that you're looking to invest and you're wondering how you would be able to best maximize its potential of growth and earnings for you? Are you trying to grow your equity and you want to find out where best to plant it so that it can grow for you and serve you in the way that you want it to? Okay, well, in this conversation we're going to be having today, we're going to be looking at how to do just that. So pull up a chair and let's get talking about how to grow our wealth and exploring what investment vehicle would be best for you. Welcome back to Ira Living. In today's episode, we're going to be looking at the best investment vehicle in which to use to invest, and then you can make a decision as to which one would be more suited for you. Now, many people are content with their investment vehicle of their time for money when they go to their employer and do their 9 to 5. Be mindful that whatever your investment vehicle is going to be, you are going to need to trade your time for money. It's just about how you're trading your time and how much you're getting as your return on your invested time that you're trading. Now, we're going to be looking at a few groups of ways in which that people can actually invest and grow their wealth. Now, one of the first things to contemplate is the fact that people tend to use side hustle as a means. But side hustle have its impact. And we know that over time, this excess devotion and of our time elsewhere in conjunction with our 9 to 5 exhausts and burns out individual and can lead to mental and physical illness and unrest. So we want to look at other scopes in which we can actually invest and make our money do some of the working and we do some of the managing of it so that we can benefit from a maximum yield that is possible. So in this video today, we're going to be looking at 4 primary vehicles of investment that you can look at in order to grow your wealth and to invest your finances to build equity. Now, number 1 is buying a business that you know have potential and then being able to stabilize that business and then scale the business up. It might be that you choose to start a business from scratch. However, that's going to require a lot of additional work in getting all the infrastructure put in place and getting a team to work for you, and then get on the journey of starting to build out a business, getting a group of clientele and building a base, and then being able to look at avenues of scaling it. If you're able to buy a business that is already functional, already has a set of staff, already have a base in terms of its clientele, then that would cut out some of that extra heavy lifting for you, because what you would then need to do is to look at prioritizing how you use that business to serve your client base so that you can build out a better revenue intake and then be able to scale that business to serve the people in your locale. The second avenue is buying real estate. Now, though this might come with a little bit less heavy lifting when compared to buying a business, it does come with a lot of more requirement for initial investment. So though the work might be less, the initial investment that you need to get this business going is going to be significantly more than if you were buying a business. So buying real estate comes down to you being able to buy whether residential, commercial, or resort facilities, and then being able to use this in a way to service your own needs. When you consider buying real estate, there are very many avenues that you could take. And one of those could be that you're buying property that needs to be redeveloped. And once you redevelop those, you can then decide whether you're going to sell those on. So whether you're going to sell on those residential, commercial, or resort real estate that you purchase. It could also be that you decide to buy them and then you decide to rent them out in order to continue to keep them as part of your portfolio rather than to release your equity out of it. And so you can decide which of those pathways you want to take in terms of your real estate. It could be that you decide that you want to go down the path of building your own development and you want to start a small development and then gradually build out. Sometimes that might be that you buy properties that are needing to be refurbished in order to do so. And it might be that you decide that you're going to start from fresh and buy the land and then build on. Investment vehicle number 3 is investing in commodities. Now, commodities are raw materials that we use to manufacture consumer products. And so these are things such as gold, bauxite, iron ore, oil, coal, turbines, so like wind turbines, hydro and solar plants, farm produce, and other different mining areas and mining resources. Now you can decide on how you want to go about this. For some people, you might be able to raise enough equity to build out a small mine and be able to fund that. For others, it might just be that they're going to be doing this as a form of investment, and so they buy stocks into companies that focuses and prioritizes these as their areas of expertise, and in so doing raise or build their equity that way through investment. Number 4 was briefly alluded to in number 2, and that is buying land. These lands that you buy can either be farmlands, commercial lands, or residential land. And whichever of these that you buy, it's buying and banking on them. You can decide that you're going to be selling them off for a profit, or you can decide that you're going to be leasing them, or you can decide that you're going to be developing them for yourself, depending on the portfolio that you have. The work level that goes into each of these diminishes as you go along. However, oftentimes the level of investment that you need to put in them also increases as you go along. So what you want to do is to try and decide which of these vehicles is going to work best for you based on the amount of time that you need to commit to each of them if you're going to undertake any of them. Now, bear in mind, if you're somebody who is happy and content in your 9-to-5 career that you have, you can still invest in each of these different avenues whilst retaining your 9-to-5. So this would be an avenue for you to increase your equity and give you options that you can take. Remember, financial literacy is revolutionary. It has transformed my life, and I believe it can do the same to yours.